Greetings, everybody. Welcome to Liberty Call. Today is Friday, February 10th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Not a terrible day in the markets here. We see a little bit of green. The SP 500 was struggling most of the day to get back into positive territory, and it looks like at the very last minute finished in the green. Dow was in the green most of the day. NASDAQ not so much. And looking across my screen, I see a lot of red. So it looks like February 10th was not the best trading day out there. So, all right. Well, if it's your first time watching this fantastical show of all the geniusness that I'm about to share with everybody, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. I'd greatly appreciate it. And let's go ahead and jump in and see how the numbers turned out for today. Dow Jones was up 0.5%, closed at 33,869. SP 500 was up 0.2%, closed at 40,89. NASDAQ was down 0.61, closed at 11,718. Small caps were down 0.14. The VIX fell today 1.11%. It's currently holding at 2048. Canada was up 0.07. Brazil up 0.16. Mexico down 0.58. Jumping across the pond in Germany, they were down 1.39. UK was down 0.36. France down 0.82. Euro stocks down 1.23. Netherlands down 0.64. Spain down 1.36. Italy down 0.86. Switzerland down 0.78. And one bright spot in Western Europe, Portugal was up 0.33%. Both Russian exchanges were in the red. The MOEX was down 0.04. The RTSI down 0.62. And the overnights in Asia, Japan was up 0.31, Australia down 0.76, New Zealand up 0.25%. The Chinese markets all red. Shanghai was down 0.3, the SCSE component down 0.59, China A50 down 0.62, DJ Shanghai down 0.4, Hang Seng down 2.01, and the Taiwan weighted was down 0.08%. So, like I said, pretty ugly for today, but all in all, not the worst. So let's take a look and see how the week turned out. Let's jump back over here. The S&P 500 looks like it's going to finish the week off in the red, down about 0.75%. The Dow looks like it's going to finish the week pretty flat, maybe up 0.01, maybe, or flat, somewhere in that range. NASDAQ's going to finish the week off down 1.55. The Dow Utilities going to finish the week off down about 0.5%. And the Dow Transports down almost 2.94% for the week. So looks like everything but the Dow, and the Dow, like I said, finished basically flat for the week. Everything else was in the red, so not outstanding by any stretch of the imagination. So let's go to the daily chart, and we can see here at the beginning of last year, when the market started to turn, we've bumped up against these lines of resistance on a couple of occasions. This time we actually broke through it, but if we zoom in, we can see that a lot of that steam has starting to wane. Same thing here with the stochastic chart. It's starting to dip over. Same thing with the Wilder's relative strength. It looks like it's starting to fall, and it looks like we're about to have a cross here on the momentum indicator. So I would guess, again, I don't claim to know what's going to happen, but if I was going to make an educated guess, I would say we're probably going to tip over again and probably fall back in line with this longer trend. But again, like I've said before, I could be wrong. It is certainly a possibility. I'm not clairvoyant, but just looking at the charts and the trends and everything else that's going on. See, I put Jake to sleep back there. I mean, he's out cold. Hey, Jake. Hey, Jake. Oh, there he is. There he is. He's always on watch. He keeps the headquarters of the world headquarters here at DSA Financial very, very safe with his barking prowess. All right, well, let's go ahead and take a look at the economic data that came out this week. There wasn't a whole lot. Jobless claims came in at 196,000. Forecast was 190. Last week's number was 183. The continuing jobless claims came in at 1.688 million. Forecast was 1.658 million, so about 30,000 off. Last week's number was 1.65 million. So went up by about 38,000 from last week's number. All right, the consumer sentiment came in this month at a 66.4 number. Forecast was 65. Last month's number was 64.9. All right, so that's all the economic data that came out this week. Like I said, it was a light week. I know there were a bunch of companies reporting earnings. I know, and I probably covered a lot of those through the recordings earlier this week. So, market recap: S&P 500 pairs losses but struggles for direction as Nvidia and Lyft weigh. All right, let me bring up my notes. The S&P 500 index suffered a decline on Friday with the stock market struggling to find direction. The decline was led by a drop in chip stocks, with Nvidia being the largest contributor. Despite the decline, Alphabet held steady after several days of losses. Nvidia stock fell more than 3% as investors questioned the stock's future growth prospects given its current high valuation. The stock is up 44% year to date on the back of increasing demand for artificial intelligence applications such as OpenAI's ChatGPT tool. However, the earnings front showed weaker than expected results, which added to the negative sentiment in the stock market. Lyft saw a drop of more than 32% after reporting revenue guidance that fell short of expectations and a surprise quarterly loss. The ride-sharing company's margins were hurt by lower prices and rising costs. Energy stocks helped offset losses in the broader market as rising oil prices provided support. Russia announced that it would reduce production by 500,000 barrels per day, which led to expectations of increased energy demand in China. Goldman Sachs downgraded its 2023 price target on Brent crude to $75 a barrel. So right now, Brent is trading in the 80-ish range. So they seem to think it's going to go down a little bit. But a lot of the articles I've read and the smart people I listen to seem to think that oil is potentially going to go up over $100 at some point before it actually normalizes and levels back off when inflation comes to an end. But we shall see. All right, next up on the docket, U.S. posts $39 billion January deficit after pension fund bailout. Let's see what that has to say. The U.S. government recorded a budget deficit of $39 billion in January, a drop from the $119 billion surplus from the same period a year earlier. This was due to a decrease in revenue and increased costs of a union pension fund bailout. The Treasury Department has warned that it may not be able to pay U.S. obligations beyond early June if the debt ceiling is not raised. Oh, darn. The government won't be able to pay its bills. What will happen? I think we should just close it down. Are you with me? I mean, shut down the federal government. We'd all say, me personally, between the wife and I, we'd probably save about $60,000 to $70,000 in federal taxes that we get robbed of that I don't get any benefit. I mean, dropping bombs on, the folks in the Middle East and starting wars in South America and all the other, all the problems with Russia and Ukraine that we helped start. I mean, again, we don't need to be involved. All right. Outlays in January were $486 billion, up $140 billion from last year, with the increase attributed to President Biden's $36 billion bailout of the Central States Pension Fund. Yeah, because bailing out private industry is what the federal government's there for. Social Security costs rose by $12 billion, and interest on the public debt rose by $8 billion. Receipts for the first 4 months of the fiscal year were down $44 billion to $1.473 trillion, while outlays grew $157 billion to a record $1.933 trillion. So let's do some quick math on that. $1.933 trillion was spending, while the income was $1.473. So they're just over a third of the way through the fiscal year. They're already $500 billion overspent. And, a couple nights ago, we saw President Brandon running this soup cooler saying that how he's cut the deficit and blah, blah, blah. Well, hey, moron, here's what happened. The deficit got way out of control due to all the federal spending in 2021 or 2020 and 2021. And then you can't then look back and say, oh, we didn't do all this stimulus this last year. Look how much money we've saved. I mean, come on. I mean, are the American people that stupid? Well, yes. What am I saying? And then finishing up, the Federal Reserve posted no earnings in January, a trend that is expected to continue for several years. Not good. Not good. All right, then this last article here, revisions show U.S. consumer prices a bit firmer than previously reported. So looks like we did not have the drop we expected for the December numbers. U.S. monthly consumer prices increased in December instead of decreasing as previously estimated, according to data from the Labor Department's annual revisions of consumer price index data. The December CPI rose 0.1% rather than dipping 0.1% as reported last month, while November's data was revised higher to show an increase of 0.2 instead of 0.1. The October data was also revised to show a rise of 0.5% instead of previously reported 0.4%. The revisions were the result of recalculated seasonal adjustment factors used by the government to strip out seasonal fluctuations from data. The spending weights used to calculate CPI were also updated, which will be effective with January's report. The new weights increased housing's share of CPI to 44.384% from 43.008%. So it looks like they increased it by about 1.33%. While transportation's share decreased to 16.744% from 17.737%. Excluding food and energy components, the December core CPI rose 0.4% instead of 0.3% as previously reported. The November data was revised higher to show core CPI increasing 0.3% instead of 0.2%, and the October core CPI data was unrevised. Some economists believe the revised data raises the risk of higher inflation readings in the future, but others believe the path to disinflation remains intact. A survey conducted before the revisions and updates to the seasonal adjustment factors was published estimated that the January CPI would increase 0.4% and the core CPI would rise 0.4%. However, some economists, including Morgan Stanley, have raised their estimate since the updates were published. The Federal Reserve has adopted an aggressive monetary stance in response to higher inflation, yada, yada, yada. All right, so that's everything that I had to cover for today. So it looks like the government was wrong on their numbers again. Inflation was a little higher for the last quarter of the year than what they claimed, but we shall see what the January numbers look like when they come out probably in a couple of weeks, and see what the CPI and core CPI numbers look like when that does occur. So, but if you're shopping at your local grocery store, Walmart, or wherever you do your weekly buy your weekly consumables, you probably have noticed that everything is way more expensive than it was 2 or 3 years ago. I know I see it, and when I make my weekly trips to the store to get, grab the things that we go through each week. And between, meat and eggs and everything else that has just exploded in price over the last couple of years. What used to cost me $50 to $75 is now costing me around $100 to $120. So, I can get by with it. I could always eat less or, try to, scrimp here and there. But if you're already scraping by and things continue to get more expensive, it's got to be rough. So you certainly have my sympathies. All righty. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope everyone has a fantastical weekend. We have the big game coming up on Sunday, so should be really exciting between the Chefs and the Eagles. So I really don't have a dog in this fight. I really don't care about either team, but I'll probably watch a little bit of it. I did watch a lot more football this year, or pro football this year, than I did last in the 2021 season. I didn't watch any regular season games. Did watch some of the playoffs and the Super Bowl, but this year I watched a little more. The Texans were pretty dreadful, and DirecTV was nice enough to give us all their customers the Sunday NFL ticket for free this year. So I figured, hell, if they're going to put the Texans games on, I might as well watch them. And even though I'm up here in Colorado and the Broncos are terrible too, so they're not much to watch either right now. So, but with D'Amico in Houston, I think we have some brighter days ahead of us if you're a Texans fan, and we'll see where things go. I'm really hopeful that he's going to turn them around. Disappointed that Lovey didn't make it another season. I thought Coach Smith did a good job considering the fire sale that's been going on with the Texans the last couple of years. But anyways, all right. Well, like I said, hope everyone has a fantastical weekend, and I'll see you guys next time. Adios.